This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Rachel Lynn. Rachel is the co-founder and CEO of SynFutures, a decentralized derivatives trading platform. Welcome to the show, Rachel.
Hi, Andy. Thanks for having me.
It is a pleasure. Let's do what we do at the beginning of the show, Rachel. I'll invite you to please introduce yourself. I'd love to hear a little bit about your personal backstory in the lead up to co-founding SynFutures. What have you been up to?
Sure. So, hi, everyone. My name is Rachel Lin. I went all the way from traditional finance to fintech to CeFi to now DeFi. So I started my career with a global investment bank, Deutsche Bank, for its structured derivative sales and trading desk before I joined a fintech company, Ant Financials. So it was in Ant Financial when I led the first versions of blockchain platform that I grew lots of interest into blockchain, and later on joined one of the largest Asian neobank right now, Matrixport. So back in Matrixport, I was one of the founding partners and head of DeFi lendings departments. But my interest always in the, let's say, the real Web3 blockchains innovation. So that's the reason why I started SynFutures, a decentralized derivative platform, enabling anyone to lease and trade anything just within 30 seconds.
Okay, so expand on that a little bit. If that's the headline, Rachel, so SynFutures is a next generation decentralized derivatives platform, creates an open and trustless derivatives market. So essentially the idea is you want to enable traders to be able to, I guess, eventually trade on anything, right?
Yeah, exactly. SynFutures offers let's say an Amazon model where anyone could come to the platforms and listed any assets, basically within 2 clicks. And so the idea out there is that with the blockchain technologies and its trustless natures, everyone should be able to become one of the, let's say, the financial service provider that used to be dominated by all those large institutions, funds, and also like earn yields out of it. So we would love to compare ourselves to Amazon versus the traditional finance, like high-end stock model, and it aims at democratize the markets by creating an open market for everyone.
And you might be onto something, Rachel, because I can see you've got some, fairly interesting backing behind you, some fairly big names in terms of the investors that are backing you. There's Pantera Capital, Polychain Capital, Dragonfly Capital, Framework Ventures. These are well-known names.
Yeah, I mean, we got lots of support from our investors, just now the names that you mentioned. And I think the platform's also been doing very well with the help of the whole team that have a very strong background. So we have a team that's very well balanced and consists of like Wall Street, Valentine's, and also blockchain technology experts, PhD in cryptographies and advanced engineers, as well as very experienced crypto marketing team. So, I mean, with the support of investors like Polychain, Framework, Pantera, Standard Cryptos, Dragonfly, among others, and a strong team, we are building the platforms with very solid financials, design, risk management, securities, as well as wide connections of the industry to empower more assets.
And I'm reading that SynFutures is at the moment, I think, the largest derivatives exchange on Polygon. But you're deployed across your multiple blockchains, aren't you?
Yeah, like we firstly deployed the platforms on Polygon and has since received great amounts of support from Polygon ecosystem. So, and rapidly we grow to become the largest DeFi DRP platform. And for our version 1, we have already seen cumulative trading volumes of about $18 billion within 1 year, and over 75,000 users. That's without any token incentive, which we're very proud about. And yes, we deploy multi-chain, but I think like for version 1, it is let's say the minimal viable products. And given that Polygon ecosystem has offered lots of supports, and most of the liquidity has been concentrating on Polygon. But yes, we're looking to expand our upcoming version into other blockchains and layer 2s as well. Yeah.
And so I think you said, Rachel, that 75,000 traders, is that what you said?
75,000 users so far.
Yeah.
About 50,000 are traders, and
sure.
The others might just make some deposit without any trade. Yeah.
And do you have any kind of like data on who those users and traders are, and where they're from? Who are the kind of people that you're trying to attract to the platform?
Sure. We did have some analysis on the traders, and even talked to quite some numbers of community active traders, and most of them, let's say, are still DeFi native traders. They interact mostly with like us and other like spot DEX. And that's actually one of the reasons why we are also tapping into other asset class like NFTs and gaming assets. The majority of traders are, let's say, more large retail than institutions. That's something that we're also very proud about. After some very intensive discussions, we do realize that today's DeFi could attract users from 2 angles. Number one, definitely, tokenomics, and it's definitely sort of like subsidizing your users, right? But the other is really coming from a unique assets perspective. So you have to trade on SynFutures for some of the assets that you wouldn't be able to find anywhere else. So many of our users can, because they found that SynFutures is the only place for them to trade their favorite tokens in a decentralized exchange. So over time, we established partnership with some of the trending projects, and their community users become our community users. For example, large project like Frax, Evergochis, and some other names have partnered with us and even provide incentive liquidities in our platforms.
Okay, and look, I want to talk about the NFT stuff, Rachel. But just before we do that, maybe just talk through, I suppose, what the product offerings are in terms of the derivatives trading. I know there's perpetual futures. Maybe just talk through the derivatives product, and then we can move to the NFT futures trading.
Sure. For our version 1, we already offer over 250 different pairs to users with the dated futures. And for version 2 that we just launched, it is an upgrade of the model with much better UI, UX, and the one-click model for everyone to trade. And for version 2, we offer dated futures as well as perpetual futures. But what we're most excited about is the upcoming version 3 that is expected to be launched later this year. With version 3, we will be launching a revolutionary model which we call a pearl necklace model that's essentially be the first in the market to offer like a fully on-chain and natively incorporate model for range AMM and order book. So you'll be able to enjoy, let's say, for example, I mean, like Uniswap version 3s plus an order book, like say DYDX models, just in one single combined models that's fully on chain. So we've been looking forward to also like seek the advices from communities and market makers and welcomes to our like communities and also like discuss and build together with us.
Awesome. Well, I said we talk about NFTs and so you're one of the first platforms to offer, I suppose it's like an NFT futures trading product. You call it, I don't even know how you say it. Is it like NFT shares or how we say
it? Yeah, we call it SynFutures. So NFT
Futures.
Futures.
Yeah. So, tell us what that is.
Sure. NFT Futures is a platform for you to long and short NFTs just within 2 clicks. You will be able to trade all those NFTs, say, for example, CryptoPunks, Bored Ape, and even shorts their price use just $100. So the idea is that the NFT futures could use the same smart contracts that powering our core crypto derivative products SynFutures, and also backed by very solid risk management using our SAMM model. So it would be resilience and protects LPs even in very volatile market conditions. The NFT futures is also part of the permissionless missions that we've been seeking. So if you go to our NFT futures website, that's www.nftures.com, you'll see that it looks like just a Tinder style interfaces where you will be able to long or short crypto future NFT futures just by clicking like or dislike.
And so why have you gone with that kind of Tinder style UX? Is that just to keep it like really fun and simple and engaging?
Yeah, I mean, one of the reason definitely is that we believe that crypto is for everyone's, and we need to lower the entry barrier for everyone's by creating a much better user interfaces. So I mean, including NFT futures and our crypto futures. If you look at our SynFutures.com, all our D apps is designed in a way that is that would have seamless user experience. That's number one. And secondly, I think we do find similarities in all of the NFT collection, right? It's more visible, and people would love to enjoy the pictures rather than seeing all those numbers and datas. Then I think like a design that featuring the picture itself, and the design itself is much more important than displaying all those like code numbers. So that's the reason why we found that by using sort of like a cards that could be swipe like back and forth would be a best user experience for all. And that's just one one cases of our efforts to offer a varieties of products and offer very simple and friendly user experience. For example, we also launched like hash rate futures that will be able to hedge against your Bitcoin mining products, Bitcoin mining's like outcome productions. And we're even actively looking to build our exchanges in one of the metaverse where you could simply hedge your positions of your gaming assets. So the beauty is that by using blockchain technology, all of this are using the same smart contracts that were built at the first place, and it incurs very minimum operating costs, but could offer as the varieties of assets to cater all the needs. So it's like an Amazon store, an Amazon platform where different categories of product will be able to list it easily.
I like it. Yeah, and I get that, being able to hedge your position against what the Bitcoin hash rate could do that's an interesting proposition for miners for sure. But like with the N futures or the NFT futures, because the kind of people that are into NFTs are typically, a lot of them are degen traders already. So is this just giving kind of existing derivatives traders who might be less interested in the specifics of each collection, but they just want to go long or short on a different collection depending on where they think the market is going?
Yeah, I would say that it could attract both groups of traders, and we've received like very good numbers of sign-ups, and some of them been answering some of our questionnaire about what they usually trade, and we found that, I mean, let's say majority of the users that answer their questionnaire so far is NFT like degen collectors, but yeah, about 30% or more have been heavily trading like other like derivative pairs and just BTC, ETH, and other major pairs. I think in a very healthy market, you would love both groups of traders comes, because for one thing, this is essentially like NFT, so it could cater to the needs of NFT lovers or degens like collectors. But at the other, in the other hands, all those traders could become arbitragers and, let's say, even speculators. It will help with the markets to discover the right price for the NFTs. So I think traditionally, like NFTs, there's only one way to trade NFT, that's long NFT, right? So it really could result in the manipulations of price and also the overhype of certain collections. But with these different groups that will be able to short the NFTs, it could help us to reach a fair price of NFTs. That's also a good. That's also very beneficial for NFT collectors.
And what about NFT liquidity issues?
Yeah, I think this is the most important issues that we've been discussing. For one thing that we see in the markets, the NFT plus DeFi protocols being booming. One, let's say an indexing protocol where they combine different types of NFT into one pool, and there's like increase the liquidity over the certain collections. The other types of projects that we see is going the other direction. So you put a high value NFT and fractionalize it into small pieces, and you could create like millions of tokens just from one simple NFT and increase its liquidity. So our work is built in partner with these NFT and DeFi combined projects to find the most liquid NFTs. So unfortunately for NFTs, we wouldn't be able to offer an NFT futures for every NFT because that would be very irresponsible for very illiquid NFTs. If you offer derivatives, chances are that traders might get liquidated very easily. Yeah, so we still, have certain like default selection criteria out there that these NFTs should reach certain trading volumes and the certain liquidity ratios before they could be listed.
Yeah, just stick to the big collections. I think that makes sense, Rachel. Yeah. Look, I mean, it's, we're kind of in, I suppose it's crypto winter, crypto bear market at the moment. What kind of, are you still seeing new users come to the platform just because of the unique product offerings that that you guys are slowly rolling out?
Yeah. Yes. I mean, like we do see a slowing pace of new users, to be honest, during this crypto winter compared to previous, let's say last year right now. But since the unique features that we've been talking about, the permissionless features, we found that still people are looking for interesting assets to trade, and the uniqueness of the assets really the core reason why we're still attracting users. I mean, for that, I've been putting lots of thoughts into what should be what a DeFi protocol should be. When its user experience is not that compatible with centralized exchange and centralized platform, and when the networks still very congested compared to centralized server, right? We've been thinking around that, and definitely, I mean, token incentives is one of the reasons to attract people, but it wouldn't last for long. If people just came over for token incentive, chances are that they use it and they dump the token and they go. So this is being observed by lots of other protocols during this crypto winter, right? Because their tokens no longer worth that much for people to come. But of course, the other angle, by offering something that you can't find anywhere else, would be a much more sustainable way to attract users. And also, that is at the core of the advantage of blockchain. I would compare this to, say, early Amazon years, right? Why do people firstly go to Amazon to do shoppings instead of going to a nearby store? It's so troublesome, right? You have to link your credit card, you have to register, and you have to wait until the products delivered to you. I mean, that might be like days. But people went to e-commerce because it offers something that you can't find in a nearby store at the very first beginning. And with that real demand out there, the infrastructures, say logistics, could be built up, the user experience could be improved. And we're saying that like internet is Web2 and blockchains is powering on Web3 economy. So that logic actually also apply to blockchain. Right now, it is the internet of assets and internet of values. But in essence, like by offering something that's the Web2 could not, offers is the right way to attract users, even with very, let's say, poor user experience as of today's.
Yes, indeed. But for all this to really roll out in terms of a wider mainstream adoption, Rachel, we need some more friendly crypto regulations as well, I think. And I think, I saw a piece, a blog post you wrote recently talking about why global coordination on crypto regulation is important. Do you want to just speak to that?
Sure. I think first of all, we are sure that regulation is coming, and that's in views of number one, the recent crypto market turmoil, definitely, and secondly, regulation normally can when it becomes, let's say, systematically important. So let's say it's still a good sign that crypto has grown into such a scale that regulator believe it is important to get it regulated. Right. So we would expect regulations to come in the next few months and next few years. And secondly, I would say that it is also a good thing. I would view regulations as something that could protect normal investors and protects normal users. And the regulations not when I talk about regulations, it's not only regulation by the authorities, but it's also regulations by the whole industries. When you say self-regulations organizations, right? I mean, you have to really impose something on yourself and I mean, like, stick to some rules that could protect your users for these industries to boom and grow in a much more sustainable way. And the other thing is that, I mean, only with regulations and some of the player will be allowed to come into the industry. Say, for example, some funds, traditional funds would need to invest into a regulated platform and regulated products by their mandates. So by being able to adhere to regulations, we will be able to attract even much more like traditional finance players and also like users. So that's the my view on the regulations. But the global coordination is definitely needed because crypto is global in nature. And for if different regions of regulations speak differently, it's very hard for crypto projects to adhere to different regulations. So the global coordinations of both regulators and the industry player is essential for the health of the industries. I would argue that all the regulators are also learning crypto themselves. It's brand new, and regulators in different jurisdictions have lots of other stuff to cater to, right? So by advocating crypto, by sort of like educating the regulators from a global perspectives, the industries could gain much more support from regulators. Ultimately, I think like blockchain is a technology that could even help regulators in terms of protecting users, much more open, transparent, traceables, and so SynFutures also in these efforts. And earlier we went to IMF to present to different countries, regulators. We spoke with SEC commissioners, and we're thinking about events. I mean, talks with other DeFi protocols and other projects to get an associations and if possible, we could, I mean, initiate more discussion with regulators.
Got it. Thank you, Rachel. Well, just to finish off then, tell people where they should go if they want to learn more about the SynFutures platform and the different product offerings that you guys have. And look, shout out your Twitter profile if you're on Twitter yourself, or SynFutures is. Where should people go?
Sure, thank you. So, definitely number one, our website, synfutures.com, that's SYN, futures, FUTURES.com. And we have links to all our social medias out there, but do follow us on at SynFutures DeFi on Twitter and join our Discord and Telegram. Also, we'd love to take the chance to say that we are opening up our registration for NFT Futures. And we are launching our exciting version 2, and do come and play around and give us feedback.
Awesome. Sounds great. Thank you very much, Rachel. All the best, and bye for now.
Thank you. Thanks, everyone.
All right, there you go. That was Rachel from SynFutures. Yeah, very cool. You can trade futures, perpetual swaps, obviously, all that good stuff. But yeah, they're essentially wanting to enable the trading of anything if they can make a market for it. And of course, yeah, in futures, NFT futures, go long and short on, some of the bigger NFT collections. Not sure how I feel about that, but I guess, yeah, there'd be definitely a market for it and a need for it. So it's just the way the world is going, anything and everything will soon be tradable. Interesting times. All right. Well, thank you for listening, team. That was another episode of the Crypto Conversation. Don't forget to subscribe to the podcast in whatever podcast app you are using. But that is today's show. This was the Crypto Conversation for Brave New Coin. See you.